Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
That's right. AJ Brown here to make you a better investor, 20 plus years strong. My name is Cyprian Francis, and with me, as always, the main man of the hour, Mr. AJ Brown. AJ, good morning. Happy last day of Q2. How are you doing today?
I'm well. How are you, Sip?
I'm doing very well. I feel like there's a lot of news coming out, whether it was the presidential election, we've got some earnings numbers, we've got some M&A or in big investments taking place. What are you seeing? Where do you want to begin today's show? What is the top headline? We're still up here at these all-time highs.
Well, I mean, of course, today's personal consumption expenditure numbers came in, and there's this big disjunct between what the Fed has been saying and what investors think is about to happen, at least with interest rates, right? So, personal consumption expenditures index, I'll go ahead and pull that up right now. Here it is. So what's really nice about this picture actually is it shows that incomes were higher than expected, but it also shows that the personal consumption expenditures were lower than expected. That means people's incomes, their paychecks are getting bigger at a faster rate than their expenses are this past month. But then when you start to drill down and you factor out things like gasoline, oil, food, milk, eggs, things were flat, right? 0%, 0.1%. Now, remember, we also have these annual numbers, but what these annual numbers of 2.6 do is they look at the last 12 months, right? But because of a lot of the volatility, a lot of economists are actually taking the current monthly number and multiplying by 12 to kind of get an idea of what might be happening in the future. And so if you take 0 or even 0.1 and multiply it by 12, I mean, that's well below the 2% target that the Fed has. So, investors have priced in, if we take a look at what investors are looking at, they've priced in 2 rate hikes in the next before the end of the year. So they have one priced in for September and then one priced in again for December. So that's a little bit different. The Fed has been quite hawkish, whether it be Jerome Powell or the other Fed presidents, saying that, hey, we want to make sure inflation is tamed before we change anything. The Bank of England did hit its inflation target rate of 2% and decided not to lower interest rates. So they really wanted to hammer in that inflation control rather than respond too quickly. At the same time, there was a dissenting Fed president that was interviewed this past week that came in and said, hey, we're going to keep our eyes on any sort of recessionary pressures and make sure that we act accordingly. So she was a little bit more on the dovish side. So yeah, investors aren't quite taking the Fed at their word that they're only going to do one rate drop. They've priced in 2.
And whether it's 1 or 2, the market likes that, right? The market is at this point tired of these high interest rates. And so flat numbers are almost as good as negative numbers, right? Where we're finally seeing inflation top out at some point. I don't know whether it's topped out or it's starting to trend down. And
trending down would be bad, right? Trending down would tell us that things are slowing down rather than keeping at a nice, consistent but slow pace.
And in the notes here today, you wrote that the risk is if they don't lower soon enough, that we'll hit a recession, right? And that could be double bad. So it's almost better to just give us our quarter point and let's just keep chugging along, right?
Yeah, you know what? It's so interesting. I was really delving in. So on Tuesday, we got our consumer confidence numbers, right? And I've always looked at these numbers and realized that if we start to get into the 90s, and this time we closed just slightly above 100, we're like just under 100 and a half. But when we get into the 90s with consumer confidence, that's usually like that's usually like recessionary territory. So I actually delved into the report a little bit further, and you can get this right. The Conference Board is the organization that does this consumer confidence, and it's really interesting because the present situation index is the main number that's reported, but they've got the expectations index. And based on consumers' short term outlook for their incomes, their businesses, their labor market conditions, this actually fell to 73. And that was down from what it was in May. And when these numbers traditionally have been below 80, then that's usually recessionary territory. And we've been there for 5 consecutive months. So it's so interesting to me. This is like the first time in a long time, as long as I've been an investor, and maybe as long as I've been alive, which is 50 years, 51 years. This is the first time that there's been such a disjunct between how people think and feel they're doing versus what the numbers are, even on a micro household level. When you take surveys and you actually ask people to look at their personal economics, things are better than can be. But the sentiment out there is that people are disappointed about, they're fearful. And so it's weird because they're fearful, but we're not sure why.
Yeah, and I actually have an interesting chart that I want to pull up too, and that's how we, at least the rhetoric is, wow, the market is doing great, companies are doing great, the market is all at all-time highs. And then I came across this chart here, which is basically the ratio of the S&P 500 tech sector versus the S&P 500, and
Yeah.
it's looking like the dot-com boom
Yep.
where a few names are leading the charge. And so
Yep.
that's where maybe this confidence, this data is like more down to earth, because that's the majority of what humans are
Yep.
experiencing, while this top line data is Nvidia, right? Nvidia's got to account for like 8% of the total gains so far.
You
um
you're so right. It's like that's been like some of the biggest discussion points this week is that, there's only a couple of high flying companies that are pulling up the markets.
And I like these charts. I have another one, because it brings us back to these times where we did have like a big shift, right? Like the dot-com bubble was a big, I don't know, year, right? Of either highs and lows. And then the other one that I came across in terms of a chart was referencing 2008 and the housing industry, right? Where there's now the highest amount of homes available for sale since back in 2008. And so if any industry needs a rate cut, I think the real estate industry could certainly benefit from it. But it's this, we have data, it's the headline numbers sound good, but when we start to dig into it, it is flat. Like we are flat, other
Mhm.
than, I don't know, other than the S&P and some of these high or broad indexes really hitting up there. um do you
I
want to run
mean,
through any other data? Because I
I
don't. I
mean,
feel
the
like,
durable goods orders totally came in declining. That means that people are just not buying things that last a long time right now. They're holding on to their wallets, and again, whether they need to or not, based on actual numbers, is beside the point. If people feel like they should, that they're in trouble and they're fearful about their finances in the future, they're going to make their purchasing decisions on that, right? And so if you think about your old economics 101 class, a growing economy is when the dollar keeps changing hands, right? It keeps moving. And if people decide to hold on to their dollars and not spend it and then earn it, right? And that dollar starts to slow down its rotation from hand to hand to hand, that's when we start to get into shrinking and shrinking. And the Fed has a real tight line to navigate, because it's not much distance from slow to reverse, right? Recession. So they've got their work cut out for them.
All right, let's go ahead and at this moment give everyone a chance to take advantage of these movements, these happenings, right? I know that anybody watching, listening for the first time, Trading Trainer specializes in options trading. And so what we're going to do through the rest of the show is take these lessons, take these strategies. We're going to go over some real life examples. We're going to look through some setups. We're going to answer some questions. But if this is new to you and you're interested in learning more, AJ's got an awesome daily workshop where he breaks down these 4 strategies. I went ahead and threw the link in the chat. There it is. Head on over there and sign up. Also, we'll be utilizing AJ's awesome new indicator, which is starting to evolve more and more every week. So we'll also give you some instructions on how to get into that. And as always, we're streaming live. So if you in the audience have a question, certain name, certain strategy, something more specific, feel free to throw it in there. And if we have some time to run through it, we will. Otherwise, we're going to take a short break, and we'll be back in a jiffy.
You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you, along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. Well, I think with the commercial, it's a good segue into a first topic that I think is worthy of discussion, and that's Rivian, right? Tesla is the big name in the electric car space, but Rivian is definitely starting to make moves. I know that you decided to go with the Ford, I think, but Rivian in general, I keep seeing them around town and they look great. They look like cool cars. And some big news this week, I think it was Volkswagen committed a hefty number of investment dollars, and it looks like your signal is calling a buy. What are you seeing in Rivian?
Yeah, Rivian absolutely got, I think it was something like a 29% increase in price in their stock overnight when Volkswagen announced that they'd put, I think it was somewhere between $5 and $10 billion into Rivian for some of Rivian's technology to be applied to Volkswagen. We also have heard rumblings that Apple and Rivian are in talks. So Rivian has established themselves as a player in the technology world, whether it's actually business to consumer selling cars or whether people want to license some of their technology. It might be a smart move for the Rivian guys to take kind of a note from like Intel. Remember all those computers that said powered by Intel, powered by Windows? You could have a Volkswagen powered by Rivian. So, that's never a bad idea. So the investors like that, and good on Rivian. I think that makes some sense.
And just real quick off of the chart, it looks like we saw pop from about 10 up to 16. Now we're sitting at about 14. So a pretty decent return just on the stock ownership side.
It makes me think of a company that I had personal dealings with back in the late 90s, and this was a company called Qualcomm. And Qualcomm in the late 90s actually was making a cell phone network in Southern California. They were also dabbling in actually having cell phones themselves, like that would be sold at, different stores. And they figured out while I was working with them that their really big focus, their special sauce, if you will, was the Qualcomm chip. And, now that's where they decided to focus all their efforts in the late 90s. And now every single cell phone, whether it be an Apple, whether it be a Samsung, whether it be a Motorola, whether it be a Google, they all have a Qualcomm chip in it. And Qualcomm makes a pretty penny on selling each one of those chips to everybody. And again, I think that might be a play for Rivian rather than trying to run this business in a very competitive and very cutthroat business. They might take a note out of that playbook, right?
Yeah, and for anybody new to options, we've been talking about this being a potential good name to hold
Yep.
over time and
Yep.
then sell the premium, earn that kind of use it as a income and kind of like a dividend. And so put
You
this
might
one
be
on.
getting exercised if you sold that premium for July. We just had an expiration in June, right? Last Friday. And I don't think anybody would have sold the July premium that fast because this news popped up the Rivian price on Wednesday. But my goal, if I was holding a lot of Rivian, would be to always sell out of the money calls against my stock holdings so that the likelihood of being called out would be very little, but I could still make some premium, right? So instead of going for the at the money option, I'd be going out of the money and I would be waiting for, during that month, whenever Rivian was kind of hinting that it was at its highest, right? If I would have sold my call over here at like 12 or 12.50, I would have been fine. I would have kept my stock and sold that call. Now I'd be looking at selling the 15 option.
Another name that's really in the news this morning due to, I believe, some lowered forecast is Nike, ticker symbol NKE. Wow, that's a pretty big pop, isn't it?
Oh my goodness, right? They were trading pretty flat. And you guys know when you're selling premium, this is your death wish, right? When you're selling premium, premium is a range bound strategy. That basically means that in order to get your option to give you money on time passing by, right? This is a clock and time passing by. Your stock needs to stay in a predefined range. And so this would kick in your protective strategy, whatever it would be. And this is where you would hope that somebody would have a passive strategy in place because of the gapping, right? If you had an active strategy in place that, for instance, said, let's get stopped out at $85, that, you went to bed last night all happy. You woke up because the stock actually opened lower than 85. All these stop losses probably kicked in and you probably wound up, $10 under in the red than what you had expected or what you had priced in. So this is one of those cases where a passive strategy like a protective option would have done you better. But, whenever we see SIP, this consolidation where we're getting tighter and tighter, that usually means investors are uncertain and they're kind of sitting on their hands, but they're contemplating moves in the back of their mind. And when the first bit of news comes out, they either, buy or sell, but they don't just keep sitting on their hands. And so, yeah, I've got some friends who are in the shoe industry. I know the chief technical officer at Vans Shoes. I went to college with him, and he's been in that role for 30 years. And he and I were talking just a couple months ago about the shoe industry and the consolidation and how even the big players are having problems. So this earnings announcement doesn't surprise me. I don't have any insider information, but at the same time, I've been hearing rumors that, there's some oversaturation in the shoe market.
Yeah, shoe stocks are down. Semiconductor chips, AI are up. What nothing new, right? At least in 2024. All right. I see a note here for our topic of the day.
Let's actually, instead of that, let's just talk about the SPX for a second, just the S&P 500.
Yeah, and those all-time highs once again on another
All-time
episode
highs,
of the
but
AJ Brown Show.
All-time highs, but since that holiday last week, the midweek holiday, and we're having another one next week, right? July 4th is going to be Thursday. So another midweek holiday, but we really haven't, let me zoom in here. We really haven't gotten above the high from, I'm going to bring my drawings here where I keep track of the highest close. Our highest close right now was June 18th. It looks like we might get a higher close today, but you see this bar pattern, SIP? We call this a Lincoln's hat bar pattern. It's a doji candle almost. It's doji means where you opened is where you're closing, right? So there was no net price movement for the day, but the bulls really drove up price in the morning. I just saw it tick down, and then the bears kind of slapped the bulls in the face and said, "Don't be stupid," right? And pulled us right back down. And that's usually a bearish sentiment overall when the bears can do that to the bulls. And so I'll be interested at today's close going into this weekend and going into the next holiday week. I'll be interested to see if indeed we get above 5,487.03, because all this stall, this isn't a good sign for going into the summer doldrums. Remember, we start on Monday with the actual 2 months of the summer doldrums, July and August, where people kind of, sit on their hands and don't do much. And so I'm just very curious about where we end. But so far today seems like it's going to wind up being a bearish call, just like, last Thursday was.
And as options traders, as premium sellers, that's a great opportunity to pick up those insurance contracts, right? If we have found a market top. Now, I know we've been saying that for quite some time, but the timing ending with Q2 presidential debate yesterday, who knows what's going to happen?
Oh my gosh.
We've got some slowness, like those things could add up and topple, at least, short term.
Yeah, absolutely. And this, looming recession and the Fed being historically, like in the short history, slow to react to things. I'm watching the VIX. So, the VIX has been low. We made a bet. We made a bet a couple months ago that played out for us really well. We made that same bet that kind of just allowed us to get out of that trade break even. We're looking for yet another opportunity to play the VIX. And, we've been getting a couple of these signals that could totally work for us. Today, again, looks like a doji in the VIX, which, I think people are looking at what's happening. I think just like you said earlier in the program, they realize that it's just a handful of stocks that are in one industry, artificial intelligence, that are buoying the whole market. And, that's a bubble. And we'll see if that plays out.
I do have a question back on the SPX, and that's we're always trying to predict the psychology, right? And so if the Fed actually lowers rates by, let's say, a quarter basis point, theoretically that should be good for the market. But if they drop a couple words that sound concerning, that the economy is like slowing down, we could be like, oh shit,
Yep.
you know, we have to lower rates because everything's finally slowing down, and then we could top. Because, I mean, you and I are pretty shocked that this market continues to run up, especially when we go back to, I don't know, this time last year, even 12 months, right?
It's so interesting, and I'll bring up one other thing. I'm watching as the money in crypto continues to, let's pull up the Bitcoin, continues to pull out. So people really, really like this NVIDIA play. As I pull up crypto, and this site is, the CNBC site is just so slow today. Yeah, crypto just a week ago was at 65,000, and now we're at 60, just right under 61,000. But if you look over here at this chart, and it's taking a hot minute to load. Over the last month, crypto, there's been a lot of, like, billions of dollars being pulled out of crypto. It's hitting a floor of support here around $60,000. If it crashes through that, it's like as if these investors that have been attracted to cryptocurrencies are now being attracted to this AI. And again, this is like, God, I want to use the right words. This isn't your traditional managers with big money who are very calculated. This is a more emotional trader who kind of chases shiny objects, and that makes it difficult to kind of, that's what bubbles are made out of, is when everybody and their brother jumps towards a single investment and blows it up. And then as soon as that investment doesn't pan out for them, they start pulling their money out quickly, which causes a collapse. And so I worry about these all-time highs, because where is the money coming from? I'll tell you for sure that the money isn't coming from the Fed. The Fed has been very, very successful. If I come over here to their quantitative tightening, the Fed has been so successful lately of, shredding money. They're down to $7.2 trillion of IOUs. So they've shredded $2 trillion of money. So where is this money coming from to get into the markets? I worry about that because it doesn't seem like it's a consistent source.
Yeah, and then what can you go back to what's how much further do we need to go?
Well, again, it that's it's a very interesting topic, because everybody has a different thought. I mean, if it was me running the Fed, I would want to get to pre-Great Recession numbers of under $1 trillion. That would mean that, these IOUs that the Fed, right, there's been different we know that the US economy is subsidized. And up until 2008, it was subsidized with investment by foreign countries that had a surplus of dollars and didn't know what to do with them, right? The big players were Japan and China, Saudi Arabia. When they get so much money and they want to invest it into something secure, they buy US debt, because we've been pretty good at paying back US debt. But in 2008, the Fed took on this thing. You guys might remember the topic. It was called quantitative easing, where the Fed started to take on the US debt, right? But the Fed did it differently. Instead of hard-earned dollars, like these big governments like Japan, China, Saudi Arabia, besides these, Korea, besides these, actually generating profits in the world market and investing them, the Fed just was creating money, right? They're just, creating IOUs to the US government. And so that's a little bit different, in my opinion. And so the Fed should get out of that business, in my opinion. They shouldn't just be making money, right? There should be a fixed. It kind of weakens in my mind the U.S. dollar. So in my mind, they should get it back down to under $1 trillion and shouldn't be playing that game. What Jerome Powell has said is he'd like to get it to the numbers that kind of stabilized around the 2014 to 2018 time period, which was around $5 trillion. So he'd like to get it down to $5 trillion. So if that's the target, we're about halfway there, a little under halfway, maybe more like a third or so there, somewhere between a third and a half. We got another probably couple of years of this to go. But yeah, so if the amount of money that we're all working with is dissolving, right, as the Fed is shredding what they created, which wasn't real to begin with, right? If that amount of money is going away, then how is it that the market is continuing to buoy up? And I think that's exactly what we've been talking about. There's a whole bunch of money entering the market that isn't that consistent kind of calculated money. It's more emotional money. And that's, in my opinion, as an investor, not the best thing.
Yeah, that's crazy to think about, and it's even kind of funny because in the debate yesterday, as President Biden and former President Trump were pointing fingers at each other, part of the debate was, well, you under your presidency we had the greatest deficit. No, under your presidency we had the greatest deficit, and it's like under both of your guys' presidency we've had a huge deficit, and that's kind of shown in those numbers. But it's good to see the Fed cutting in, and then but where's the money for the rest of the highs going to come from, right? I think that's a very good point. So
people are taking it out of places, with these expectations that it's going to grow. People are taking it out of safe places, right? And that's not good, because when it doesn't wind up growing, these people are going to be, if you're taking it from your paycheck, if you're taking it from possibly buying your first home, if you're taking it from any of these other sources, man, you're going to be left high and dry. So you got to watch out. It's become quite unstable, and it explains to me why there's so much distrust. There has not been this much distrust in whether it be political figures, whether it be the central banks, banking. People are just not trusting anybody these days. It's every person for themselves.
And you know what? I just lost my train of thought there.
Sorry about that.
All right. So with all that being said, whether the market goes up or down, we've got strategies, we've got names that we're looking at we're going to try and take advantage of.
That's the important part, right? Because that's why, Sip, and I'm sorry to profess this to everybody. You guys probably think I'm a broken record, but what I always wanted to do was figure out how to trade these situations for profits, right? And so buy and hold isn't going to work, right? Instead, options give us this flexibility. Now we've got to separate ourselves. We've been talking about just the general welfare, specifically of the North America, United States situation, and even our personal pocketbooks as a normal U.S. citizen. Now you put on your head as an options trader, and absolutely, like you said, we have strategies that will take advantage of all of this, whether it's the increase of fear in the market, whether it's a market that's pulling back, or whether it's a market that's just stalled with indecision. We've got a strategy for all those different scenarios.
That's right. And let's go ahead and dig into our first one, right? A first name that we can kind of dissect. And this will be your pick of the week. AJ's pick of the week is United Microelectronics, ticker symbol UMC. Have we covered this name in the past? Because I'm not sure.
I think it's been more than a year.
Wow.
But I like this one. I've always liked this one. Let's take a look just back in time here. I'm going to go 2 years back. And so you can see this falls very much into that category of stock that I like, that is boring, not in the news. But remember earlier I talked about how we like to sell premium on stuff that stays within a range? Well, this just meets that criteria. And the company's not going to go anywhere, right? Because look, every time they report earnings, they report positive earnings. And not only that, they like to give out annual dividends to their investors. So if you're a company that makes money, and in fact, you're doing profit sharing with your investors in the form of dividends, I mean, you're an established company. And especially if you're not making news headlines, these are the very predictable companies that you and I can make money on by selling premium. We can create a steady income on it. Plus, this thing's very affordable, right? At $8.75, $8.90 a share. This is right up our alley for affordability. I'm going to switch over my indicators. So I'm going to those free indicators that you can download. And I'm going to switch out from the indicator I use to look at the broad market. And I'm going to switch into one that I use for trade signals. And in case anybody's interested, this is called our confirming indicator MACD. MACD, moving average convergence divergence. And if you want to know the specific settings, please take note, right? We like to use volume weighted average price as our seed price, and that's different than using closing. We like a fast length of 6 exponential. We like a slow length of 19 exponential. And we like the MACD average length of 3 exponential. Don't turn on any of these filters. This is a great trade signal that works at least 80% of the time, I think. So once we've got that all programmed in, you can see that we had a signal to go ahead and short some United Microelectronics. And that's what I think we want to do. Now, today we have a pop-up. We're getting ready to give a dividend. But what's nice is with that pop-up, we might get another opportunity because we did get follow-through. It looks like we maybe haven't gotten follow-through. We might have gotten follow-through yesterday in order to do this short trade. And so if you did that trade yesterday, you might be a little bit worried, but stick to your stop loss orders, stick to your risk management. Don't just jump ship because you're getting emotional. But we might get a second chance in order to short this stock, and that's what I would do. I would short this stock in lots of 100. I could also see possibly using a leveraged put option. I wrote down in my notes here that I could see using the United Microelectronics January 2025 leap, and it would be the $15 strike price put option. And so I could see using that. My only reservation on that is there's not much trading on that option. And since the stock is so inexpensive, you could probably get by with just shorting the stock. But that would put us in a perfect place, SIP, for us to take advantage of any move down. And then once it bottoms, starting the income engine by selling put options. I also wanted to point out, if you, for instance, back here about a month and a half ago, or even just a couple weeks ago when we got these light blue arrows, if you took advantage of that by buying some of this stock, this would be a perfect time for you to be selling your call options and buying your protective puts. And so what's kind of interesting is I can see here in my notes, and I see you just published the notes. When you have a top signal like this magenta, what we're trying to do there is we're trying to either, short the stock, or we're looking to buy put options, right? Whether it's protective put options or whether it's the initial covering position, This is when we buy put options and we want to be getting out of call options, right? We want to be selling call options. When you're at the bottom, that's when you want to be, right? You want to be buying your put options. I'm sorry, buying your call options and selling your put options. So right now we want to be buying our put options and selling our call options. So that's kind
Yeah.
of our thought there.
Yeah, I think this is a great name for any of the new options investors, options traders, seeing as it is priced so well. So
Yep.
you only need a few $1,000s to kind of adhere to your risk reward kind of parameters. So UMC, AJ's pick of the week, go ahead and add that to your hot list. We've got a couple other names on rotation. But once again, if anybody watching, listening has a name that they want AJ to run through, feel free to throw it into the chat. I see, AJ, you're running some numbers there. What are you running?
I totally am running some numbers. I was thinking of, you need $1,600. I was thinking based on how much risk that we're talking about. If you were to short this at $9 or even less, and you put your stop loss order or your buy to close order at 950, you could get into this single contract of this with a portfolio size of under $2,000. So you don't even need a few thousand. You need like $1,500 to $2,000, and you could totally get in the game with us.
And what percentages are you shooting for? Because 3%, 5%, even up to 10%. I know that those are realistic returns on a 30-day cycle using some of these strategies.
Well, our target here would be a 6% gain every time we were able to sell premium. It looks like we could do that probably every month and a half. So a 6% gain every time we can sell premium, maybe a little bit more by rolling out a protective option. I bet it wouldn't be difficult on this particular trade to get double-digit gains every time there's a premium opportunity, probably 9 or 10 times a year. I bet you could easily double your money just on United Microelectronics, trading against this one every year.
Yeah, I know that's one of the things that has surprised me ever since we started working, is that these little gains over and over add up, and they look pretty good at the end of the year when you're starting to run all the numbers. So love it. Once again, if you want to learn more, the link to the AJ's webinar is in the chat. Head on over there, sign up. If you want AJ's indicators, the link to that is also in the chat, so head on over there. Otherwise, can
I throw this out, Sip? Guys, if you find a stock where all you have to do is invest $1,000 or have a portfolio that's $1,000 or $2,000, like this one here, and you just stay consistent and disciplined and don't get attracted by crypto or Nvidia or anything like that, but just stay focused and do a little bit of work every month. Every time there's $1,000 can turn into $1 million in a 10-year period. So if you're at sitting there and you're like, hey, I'm in my mid 30s, I'm in my early 40s, and I'm not sure if I'm going to have a retirement, take your $1,000, learn this little strategy, and by the time you're 45, you're 50, you're going to be a bona fide millionaire. By the time you're 50, 55, you're going to be a 10 millionaire, and you'll be set for life. So it's just a matter of being consistent. That's exactly my recipe, Sip, is just making these little gains and letting them, parlay over a period of time.
Yeah, and I'm pretty sure my generation is very aware that we're going to run out of money, so we might as well start investing it on our own, using our own tools and strategies and capabilities. And it's never been easier than now in the history to be able to open up a brokerage account, to load some money in there, to start making some investments, to start being more active, right? Buy and hold is easy, but buy and hold and using these great options tools makes you a little bit more sophisticated, and you can hit a lot of singles, and singles can add up over time, right? So
Yep.
that's what we preach here at Trading Trainer, episode 193. We've been preaching this for 2.5 years straight. And with that, the people want to know your take on a few names, AJ. So let's go ahead and run through our speed round. Starting first in beautiful Dallas, Texas. This is Rocky from Dallas, interested in Darling Ingredients, ticker symbol
Oh.
DAR.
Mhm.
I don't think we've covered this one too often.
No, this is an interesting company, and I may be a little rough on what they do, but I think that they are dealing in fats. I think they figured out a way to recycle cooking oil, cooking fats, and they put them into new ingredients. They put them into biodiesel. They do all kinds of neat stuff. So let's take a look at the stock technically. Again, making money, 50 cents a share. The stock price isn't out of the ordinary. I can see that I've drawn some support and resistance lines. The support and resistance lines I've drawn is around 41 to 46.50, something like that. But I can see that I've dipped down. And I see that I got a really nice buy signal last week, followed by a follow-through signal, followed by another follow-through signal. But it looks like we're kind of stalling around there, which gives us more opportunities to do some buying. Let me before I say anything further, let me go back and look at the bigger picture. So Darling Ingredients is a sideways channeling stock that does like to, do some step function decreases periodically. Let me go back even a little bit further. Let me look at a 10-year chart. I can see that they've made their home for most of their life down between $10 and $20. Then they popped up around 2021, and now they're slowly deflating. This would be a good premium trade. I'm not sure that I want to buy into Darling Ingredients, seeing as how it keeps deflating. If I wanted to on the short term, now would be the time to do it, but I would be prepared to either get out of the trade next time I see a top if it doesn't hit 46.50, or to sell premium. I could also see, paper trading this for a hot minute until I get a new established support and resistance. Let's see what the option chain looks like on this guy. If I jump over here and I always like to look at an option that's around 3 to 6 months out. We're trading with traditional strike price increments. So that means every $5. And so I guess my big question is if I'm limited to $5 strike prices, could I surround any sort of range with those? I think the 35 strike price would work. If we stopped up here, the $40 strike price could work. 45 would be better. I could see trading this between $35 and $45. So I think it's doable, but I sure would like to see this pattern play out a little bit more. So maybe you take a minute and you paper trade it until it establishes a new top, and then do some shorting, a short at the new top, and get ready to make your income. I call it the income engine or the income calendar. Get ready to make your income calendar on put options, selling put options.
Yeah, and this one may be worth looking at some of the fundamentals simply because it is a unique product offering
Yeah.
service, right? That you never know when some new legislation could come in and not allow them to conduct their business, or them have the advantage that they might have for that run up. So I would probably definitely look into what's going on in the back end. So there you go, Rocky. Hopefully that was helpful. Moving on to our second name, staying in that central part of the U.S. This is Candace from Tulsa, Oklahoma, interested in El Pollo Loco, ticker symbol Loco. You ever had a El Pollo Loco? It's kind of like a
No.
Taco Bell.
Yeah. I've seen when I lived in Colorado, they were everywhere.
We have a lot
Um,
of them in California.
yeah. Okay. Okay. Look at this. I see why you're interested. You're getting a sell signal right now. Okay. And when I say sell, that could also mean short, right? Let's take a look at the option chain. Oh, good. I like to see that they're trading every dollar. You see how the strike prices are every dollar? There's not much happening though. Do you see the bid ask spread? So the bid is 0 and the ask is $1.15. The bid is 0, $1.85, 0.70. That's basically telling me that there's not that many people trading this. Let's go over to the put side and see if it looks any better. Uh, a little bit better. Like on this $11 strike price, I can see a little bit of trading, 75 cents. Here's the story behind the bid ask spread. So the bid ask spread is created basically by some people in the markets who are trading, who are creating liquidity, right? When you actually trade, a lot of times we envision that we're trading with the end buyer or seller, but there's actually a middleman. We call them a market maker, and they have money, right? And they create the liquidity. Like they'll buy a share from USIP and they'll buy a share from me, and they'll basically accumulate a position in a stock, and then hopefully by the end of the day they'll find somebody to sell it to, and they'll make the difference between the bid and the ask, right? That's how the market makers make their money. They basically provide the liquidity to keep the market moving, right? And so when you see a large bid ask spread, what that means is the market makers don't believe that there's a lot of traffic, right? There's not a lot of people trading. And so they're going to have to hold the position longer than, say, for instance, on an NVIDIA, where if you look at the bid ask spread on NVIDIA, it's a penny, right? Because they know that if they get a big position in NVIDIA, they can sell it right away and somebody will buy it. And so they don't need to make money because they can make money on the volume of trading. They can make a penny, but a lot of it changes hands in a fast amount of time. Because this doesn't change hands in a fast amount of time and they may get stuck holding some El Pollo Loco, they get paid for it. That's why the bid ask spread is so big. If there was more activity, this would be smaller. So that's how I know, by looking at the bid ask spread, how much liquidity or activity is happening. And I can see some flashing, which means there's a little bit of trading happen. I can see that the bid ask spread is tightened up on this $12 put right here. That's right. It's only 20 cents instead of, like, for instance, the $11 just went to $1.10. So, there's probably a little bit of trading happening over here on this $12 put, but otherwise, this kind of looks sparse. And so because of that, I'm just checking the September option. It too looks sparse. There's not really an options play to have here. And so you're limited now to either buying long or selling short. Pollo Loco, you're getting a short signal. I mean, you could short some stock and then look for the exit where you would buy to close, but this isn't the best options candidate, sadly.
Yeah, and it looks like they had some positive earnings not too long ago with a pop up, but a nicely priced stock that kind of gives you a little bit of flexibility. But like you mentioned,
No option chain.
not so much love on the option side. So there you go, Candace. Hopefully that was helpful. Moving on to our third and final name, and I don't know what's going to come up on the chart, and I'm very curious as to see if there's some sort of correlation with what we looked at with Nike. But Anne from Miami, Florida, wants to know, AJ, what's going on with Victoria's Secret? Ticker symbol VSCO. I wasn't even sure this was a publicly traded company.
Oh yeah, it for the longest time had a different name, and they rebranded themselves so that they were more in line with, their main brand. They also had it was a holding company that had a couple of different stores. and they totally are now focusing on panties. With that said, with that said,
And
they
bras, Len, and bras. It's a
yeah, yeah.
combination set.
Oh, yeah. Well, they also have mix and match. I only know that because my wife told me that.
PJs, some perfumes, they've expanded.
Sure. With that said, they popped down back at the earnings. I mean, look, $2.58 in earnings. This one was 12 cents in earnings. Let me go back. I just want to look at a year's worth of earnings on this. They had a loss. They had a gain. This looks like this $2.58 looks like it's because of holiday. I'm going to go back 2 years and see if they always have a good holiday season. Yes. So $2.47. So they basically, get by most of the year just to be around the holiday season. I guess the holiday season, winter holiday season, is when people gift each other naughty panties. Okay, enough of that topic. We're at a floor, and I can see what you're talking about, Anna. I can see what you're talking about with this bottom signal. Let's kind of zoom back into that bottom signal. We haven't gotten follow through. It doesn't look like we're going to get follow through today, but that bottom signal still is, holding tight, which means we can carry it over to Monday. The idea is we'll want to make sure that on the day that we actually do our transaction, that prices are above whatever the previous trading day's close was, that prices are above this close on our confirming day. So that means prices have to be above 1812. We also would like prices to be above whatever they are, whatever the high is in the first half hour of trading. That's a day trader's trick. It's called the open range. If it's higher than those three prices, then we'll go ahead and pull the trigger. And I usually don't check that until like the afternoon session. So maybe 12:45 Eastern time. Some people don't even check it until professional hour, which starts at 3 p.m. Eastern time. But at 3 p.m., if you're above confirming day close, previous day close, and open range high, you pull the trigger on this, and this is where you would buy some of this stock. You could buy Victoria's Secret. I would buy it in lots of 100, or let's see if there's a option substitute that might be had. Let's look at our January 2025. We're getting kind of close, but we could still get by with that. I might be interested, and notice even on these options that are all the way out in January, comparing it to that Pollo Loco, look at this is just a 40 cent bid-ask spread. So obviously people are investing and trading in Victoria's Secret a lot more. I could see being very interested in this $10 call. It's trading roughly at about $8.65 per share. So if you didn't want to go for the $17.98, you wanted to kind of use some leverage, I would buy that $10 call that expires out in January of 2025. That's your initial covering position. Then you make money on that as the underlying stock appreciates. And then if it tops out at around 23, around 23, or even as high as 25. If it tops out at 23 or 25, that's when you start selling call options, buying protective puts, probably buying your protective put with a strike price down around $17, something like that. And that becomes your income engine, right? You let that option, that near-term at-the-money option that you sold up here, expire with time. You roll out that protective option, rinse and repeat, rinse and repeat, rinse and repeat. I can see how you could really get by well with this Victoria's Secret trade. And I think you see it as well. My only advice to you is let's make sure that we get that follow-through day before you pull the trigger.
Yeah, I don't know if you've been into a Victoria's Secret, but they do a good job of branding and kind of selling that luxury. Although sometimes I find myself not knowing what to do when I'm in there. I just kind of stand there and twiddle my thumbs.
I mean, I don't think I've been in there since I was in my 20s, so we're talking a quarter century ago. But yeah, that's what I remember. But I remember going there with girlfriends that knew what they were looking at, and I remember sitting on the seat in the middle and just looking at these things, not knowing what to do.
Yeah, well, there you go, Anna. Hopefully, Victoria's Secret, there's some opportunity for you there. AJ did a great job of breaking that down for you. All right, heading into the close, the end of quarter two, the last day of June. AJ, next week is a holiday week, which I'm just guessing we're going to be low on the volume, right? I
Mm.
mean, having a 4th of July on a Thursday is a kind of a weird day.
Yeah, let's see. New York Stock Exchange holidays 2024. Sometimes they actually then make it looks like the following day. Here it is, Independence Day, July 4th. Each market will close early at 1 p.m. on Wednesday, July 3rd. And so Wednesday it's going to close early, and then Thursday it's going to be closed. So yeah, I would imagine that we won't see many people on Friday. Um, yeah, it's going to be one of those weeks, just like the investing 2 weeks ago. So I'd be surprised if there's much activity past maybe Monday or Tuesday, but we'll definitely see something. We'll talk about something next Friday for sure.
And if are we when's the next Fed rate hike? I'm just curious because that's probably next on our radar in terms of what's going to move the market.
Yeah, July 31st, but almost 90% of investors think the Fed's going to hold,
Well,
right?
the good thing is with some of these strategies that we've gone over, boring is good. Boring, not
Mhm.
having a lot of movement, just letting time pass
Summer
is
doldrums is a great time for options traders to make a killing. So
well. We'll find some topics to discuss next week. In the meantime, I do want to invite everybody to show a bit of love. So whatever platform you're streaming on, uh, please, 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 we would greatly appreciate hitting that like, hitting that subscribe, hitting that follow button. We do a pretty good job of posting regular content, whether it's some clips from the show, some shorts, and growing the audience. At the same time, if anything that you've watched or have seen today, you need a little bit more clarification on, feel free to drop a comment, send us a DM, head on over to the website, tradingtrainer.com, and inquire there. Someone will definitely get back to you. Otherwise, it's summer. We'll see
yeah,
what comes. Did you watch the debate yesterday?
no, I refuse. The headlines started rolling in, and I realized I don't like either of them. I think it's the worst of two evils, and I just wish I just wish there was somebody that I feel like I could trust.
Well, a lot of the talking heads, or at least the news commentators, call. I think you fall into the bucket of the double hater. They kept referencing the double hater. So there's a lot of double haters.
Yeah.
But I will say this: the funniest part in the whole debate was Donald Trump was like, oh, because the question was like, oh, how is your physical and mental capacity? Like the American public wants to know, and Donald Trump was basically like, well, I'm in great physical shape. I just won 2 club championships, not the senior club championships, the regular club championships. So I could crush the ball. I bet this guy can't even crush the ball 50 yards. And Biden is like, oh, I could crush the ball 50 yards. I had a eight handicap when I was vice president, and they went on this rant for like 2 minutes about who could hit a golf ball further. And literally at the end of the debate, I just wanted to see them both just go golfing and be like, well, I'm going to just make my decision on which one of these guys could hit a ball further.
I got nothing to say. I got nothing.
Anyways, we'll be keeping an eye
I'd
on
rather
that.
be spending my time this summer in a Victoria's Secret in a nice air-conditioned mall.
I do it for the content, Age. I got to know what's going on. I need to know what the people are talking about. I need to see it firsthand. But it was very interesting. America, the land of the great. We'll see if we could pull ourselves out of this current situation. But on our end, we're here to make money. We're here to invest. We're here to grow portfolios using the powerful tools of options. And so without further ado, appreciate everyone tuning in. AJ, appreciate your time today as well.
Absolutely.
Wishing everyone a very happy weekend. Stay safe, and we'll see you guys next week.
Bye, everybody.
For tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.